Are you an ambitious entrepreneur dreaming of building the next big thing, attracting serious investors, and scaling your vision to incredible heights? Then you've probably heard whispers, or perhaps outright shouts, about the C Corporation. It's the entity structure favored by venture capitalists, large enterprises, and anyone looking to truly separate their business from themselves. But here's the burning question that often sparks a cascade of anxiety for many aspiring business owners. Can a service like CorpNet actually form a C Corp for you, or are you better off navigating the labyrinthine legal landscape on your own? It's a valid concern. The world of business formation can feel like a minefield of jargon, complex paperwork, and potentially costly missteps. You're trying to launch a business, not become a corporate lawyer. So when a service like CorpNet pops up, promising to handle the filings, it's natural to wonder if they truly deliver on that promise for something as intricate as a C Corp. Let's be upfront. Yes, CorpNet can absolutely help you form a C Corporation. They are a legitimate and experienced business formation service that has assisted countless entrepreneurs in setting up various entity types, including C Corp. This isn't just a marketing claim. It's a core part of their service offering. But understanding how they do it, what that entails for you, and why a C Corp might be the right or wrong choice for your venture is crucial. We're not just going to answer the "can they" question and leave you hanging. We're going to dissect the C Corp, explore its advantages and disadvantages, walk through the formation process with and without a service like CorpNet, and ultimately empower you to make an informed decision for your entrepreneurial journey. First, a quick primer. What exactly is a C Corporation? Unlike a sole proprietorship or a partnership where your personal and business liabilities are intertwined, a C Corp is a separate legal entity. This means it exists independently of its owners, shareholders. This separation offers a critical benefit: limited liability protection. Your personal assets, your home, your savings, your car, are generally shielded from the business's debts and legal obligations. If the company faces a lawsuit or goes bankrupt, your personal finances are typically safe. Beyond liability protection, C Corp are designed for growth and attracting external investment. They can issue an unlimited number of stock shares, making them highly attractive to investors, including venture capitalists and angel investors, who seek equity in exchange for capital. This flexibility in ownership and capital raising is a major draw for startups with high growth potential. However, the C Corp structure isn't without its complexities. The most commonly cited drawback is double taxation. The corporation's profits are taxed at the corporate level, and then, if those profits are distributed to shareholders as dividends, those dividends are taxed again at the individual shareholder level. This is in contrast to pass-through entities like S-corp or LLCs, where profits are only taxed once at the owner's personal income tax rate. C Corp also come with more stringent compliance requirements. They are typically mandated to hold annual shareholder and board of directors meetings, maintain meticulous records of these meetings, adhere to corporate bylaws, and file extensive annual reports and financial disclosures. This level of formality requires diligent record-keeping and attention to detail, which can be a significant administrative burden, especially for nascent businesses. So you've weighed the pros and cons, and the C Corp still looks like the right fit for your ambitious plans. Now, about forming it. You have two primary paths: doing it yourself or using a business formation service. If you choose to go it alone, be prepared for a steep learning curve. The process involves several critical steps, and missing one can have serious repercussions. You'll need to choose a unique business name. This isn't just about creativity. You need to ensure the name isn't already in use in your chosen state of incorporation and meets state naming conventions, e.g., including Inc., Corp., or Limited. Select a state of incorporation. While many businesses incorporate in their home state, some choose states like Delaware or Nevada due to their favorable corporate laws or tax structures. This decision can have significant long-term implications. Designate a registered agent. Every C Corp must have a registered agent, an individual or entity with a physical address in the state of incorporation, available during business hours to receive legal documents and official state communications on behalf of the company. File articles of incorporation. This is the foundational document that officially registers your business as a legal entity with the state. It includes crucial information like your business name, address, registered agent, and the nature and number of stock shares to be issued. Draft corporate bylaws. These are your company's internal rulebook, outlining operational procedures, the rights and obligations of shareholders, officers, and directors, and the administrative framework of the business. Appoint directors and hold an organizational meeting. Directors oversee the corporation, and at the first organizational meeting, they adopt the bylaws, appoint corporate officers, CEO, CFO, etc., and address other startup matters. Detailed minutes of this meeting must be kept. Issue stock. C Corp issues shares to raise capital and define ownership. These shares are distributed to initial shareholders as evidence of their ownership. Obtain an employer identification number, EIN. This is your corporate tax ID, essential for opening a business bank account, filing taxes, and hiring employees. Apply for licenses and permits. Depending on your industry and location, you'll need various federal, state, county, and municipal licenses and permits to operate legally. Ongoing compliance. This includes holding regular meetings, maintaining records, and filing annual reports. As you can see, it's a substantial undertaking. This is where services like CorpNet come into play. How does CorpNet simplify this process for C Corp? They act as your guide and facilitator, taking on the burden of paperwork and ensuring accuracy. Here's a breakdown of what CorpNet typically provides for C Corp formation. Name availability search. CorpNet will check your desired business name against state records to ensure it's available and complies with naming rules, saving you time and potential rejections. Preparation and filing of articles of incorporation. This is their core service. They will accurately prepare and file all the necessary documents with the relevant state authorities. This alone can prevent common errors that lead to delays or rejections. Registered agent service. CorpNet offers registered agent services, fulfilling the legal requirement of having a physical address in the state of incorporation to receive official correspondence. This is invaluable, especially if you operate remotely or don't have a physical presence in your chosen state of incorporation. Many of their packages include a period of free registered agent service. With that said, thanks for watching, and until next time.